Well, global share markets had another record-breaking month in August, with the MSCI All Country World Index hitting all-time highs, ending up 2.4% in US dollar terms. On Wall Street, US equities continued their rebound from their lows in April following US President Donald Trump's Liberation Day tariffs. In the month of August, the Dow Jones Index rose by 3.2% and the S&P 500 Index gained 1.9%, posting their fourth straight month of gains. In fact, the benchmark 500 Index topped 6,500 points for the first time, notching 5 of its 20 records this year in the month of August. The technology-heavy Nasdaq Index climbed 1.6%, logging its fifth successive monthly rise. Resilient corporate earnings, stable economic activity, and steady inflation data, along with US Federal Reserve Chair Jerome Powell's hints of interest rate cuts at the Jackson Hole Central Bank Symposium, combined to boost risk sentiment and market optimism. That comes as US trade deals with the European Union and several other countries emerged, contributing to a growing sense the worst of the tariff war was behind the market. That said, US President Donald Trump's gamble to reshape the US central bank by firing Fed Governor Lisa Cook on allegations of mortgage fraud fueled fears that Trump is trying to control independent government agencies and influence interest rate decisions. Amid the US Federal Reserve drama and deluge of corporate earnings in August, one clear trend has emerged in US equities: the rotation out of expensive technology stocks into cheaper small caps. The Russell 2000 small cap index soared 7% in August. Powell's dovish pivot helped small caps outperform because these companies tend to benefit from lower interest rates as they rely on borrowing to grow and expand. Another catalyst for the rotation has been creeping doubts about AI's ability to deliver returns commensurate with bubble-like frenzy surrounding the new technology. The top-traded US stock by CommSec customers in August was chip giant Nvidia, ahead of its much-anticipated earnings result. Nvidia's share price ended the month down 2.1% after Sino-US trade uncertainties prompted the leading AI chip designer to exclude potential China sales from its quarterly forecast. Shares of Palantir Technologies traded hands, with investors booking profits on the data analytics software maker after its quarterly revenue exceeded $1 billion for the first time and it raised full-year guidance. Palantir's shares, however, dipped 1% in the month. United Health was another heavily traded stock, lifting 24.2% after Warren Buffett's Berkshire Hathaway revealed a new investment in the health insurer. In August, the top-performing stock in the S&P 500 index was Albemarle, which jumped 25.2% after broker UBS raised its recommendation on the lithium company to neutral from sell as it sees lithium prices rising in 2026 after a cattle mine suspended operations. Intel was up 23% after the Trump administration took a 10% stake in the computer chip company. The Aussie share market rallied in August with the benchmark S&P ASX 200 index up for a fifth successive month, lifting 2.6%. The index extended its longest winning streak since March 2024 and notched its best August since 2009, hitting an all-time high of 9,054.5 points on August 25. Gains were supported by a batch of solid corporate earnings results and hopes of further monetary policy easing after the Reserve Bank of Australia cut interest rates for a third time this year to 3.6%. 9 out of 11 ASX 200 sub-indexes produced positive returns in August, led by the materials sector, which jumped 9%. Shares of Pilbara Minerals surged 52.7% after its management signalled confidence about the outlook for lithium prices following recent output cuts in China. It was also a strong month for Aussie gold miners, with Vault Minerals shares advancing 46.6% after the company announced that it intends to complete a share buyback of up to 10% of its ordinary shares over the next 12 months. The consumer discretionary sector gained 7.4%, with IDP Education shares surging 57.9%, the top performer on the ASX 200 index, after the student placement provider beat annual revenue expectations and said it will cut costs. At the other end of the spectrum, healthcare stocks slumped 13.3% in August. Shares of CSL, the world's second largest producer of flu vaccines, slipped 21.4% after announced plans to demerge its unit CSL Seqirus by the end of June 2026 and lay off up to 15% of its workforce. Telix Pharmaceuticals dropped 30.6%, following the US Food Drug Administration's rejection of its kidney cancer drug, while Clarity Pharmaceuticals lost 31.8%, the worst performer on the index after it posted a wider 2025 fiscal loss. Looking ahead, our investors are embracing for what is known as the weakest month for US shares as institutional investors rebalance, retail traders slow their buying and volatility picks up. The S&P 500 index has fallen 56% of the time in September by an average of 1.2%, going back to 1927. Thanks for your time.